Hello students and welcome to the lecture. So students, as you can see here, that basically in this lecture we are going to talk about the important financial, economic and budget. So this is going to be a topic for this lecture. Talking about this particular topic, let me tell you one thing, that this topic is very important from the competitive exams point of view. Okay, the things are generally asked in the examination directly from here. So that makes this important for us to learn the things and learn the things in a proper manner. Okay. So this is going to be our topics that we are going to cover in this particular lecture. Like starting with the dividend distribution tax, venture capital funds, securities transaction tax, capital gain tax, ad valorem tax, advance pricing agreement, fiscal consolidation, current account deficit, bear market, bull market, inflation risk, interest rate risk, direct and indirect taxes, then custom duty, primary deficit, monetary policy, fiscal policy, fiscal deficit, revenue deficit, capital budget, vote on account, bulletin, public account, and at last we will have a discussion over the summary. Okay, so this is going to be our you can see the path of the action that we are going to take. All right, but before starting all of them, there is a small disclaimer that is presented over here and we are required to understand. So a disclaimer is like, the images used in a slide deck are for educational purposes only. We respect the intellectual property rights of the original creators and owners of these images. If you are the owner of any of the images used in this deck and have any concerns or issues, then please contact us at sathee@iitk.ac.in and we shall remove the image. Okay. So the first that you can see here is the dividend distribution tax. This is a tax which levied on companies that pay out dividends to its shareholders, therefore share a portion of earnings with them. Then we have the venture capital funds. So these are the funds that invest in startups, a financially riskier proportion than investing in the established company. Securities transaction tax. It is a tax on all transactions done over the stock exchanges involving the security, such as shares, derivatives, and equity links mutual funds. Okay. The capital gain tax. It is a tax on the gains that ensure when an asset is sold for a high price higher than what it was bought for, then this capital gain tax is applicable. Ad valorem tax. This is charged as a percentage of the value of a good or service, not at a specific rate per unit. This is called ad valorem tax. Advanced Pricing Agreement (APA). It is an agreement between a tax-paying entity and the taxman that indicates how the former will price transaction with its associate. Fiscal consolidation. The term refers to the things a government does to maintain the good physical health, cut debt and wasteful expenditure, and improve revenue opportunities. Then we have the current account deficit. It is a trade measure that shows the value of a country's imports of goods and services, which to be higher than the value of the exports the country has made in terms of goods and services. The bear market. It is actually a period during which the majority of security prices in a particular market, such as the stock market, drops substantially. The bull market, it is a period opposite to the bear market in which the majority of security prices in a particular market, such as the stock market, rise substantially. Then the inflation risk. The risk that the purchasing power of the future value of assets or income will be lower due to the inflation. Interest rate risk. Risk of gain or loss on a security due to possible changes in interest rate level. When the interest rate rises, the market value of a debt security will fall and vice versa would happen. Direct and indirect taxes. Direct taxes are the one that falls directly on individuals and corporations, for example, like the income tax, corporate tax, etc. Whereas on the other side, indirect taxes are imposed on goods and services paid by consumers when they buy goods and services, including the excise duty, custom duties, etc. Then we have the custom duty. These are levies charged when goods are imported into or expected from the country and they are paid by the importer or exporter. Usually, they are also passed on to the consumer. The primary deficit. The primary deficit is the fiscal deficit minus interest payment. Tell us how much of the government's borrowings are going towards meeting expenses other than the interest payments. The monetary policy. This comprises actions taken by the central bank, therefore the RBI, Reserve Bank of India, to regulate the level of money or liquidity in the income or change the interest rate. Then the fiscal policy. It is the government actions with respect to aggregate levels of revenue and spending. Fiscal policy implemented through the budget and is the primary means by which the government could influence the economy. Fiscal deficit. When the government's non-borrowed receipts fall short of its entire expenditure, it has to borrow money from the public to meet the shortfall. The excess of total expenditure over total non-borrowed receipts is called the fiscal deficit in action. Revenue deficit now we have. The difference between the revenue expenditure and revenue receipt is actually known as the revenue deficit. Shows the shortfall of government's current receipts over current expenditure. Capital budget. consists of capital receipts and payments, including the investment in shares, loans, and advances granted by the central government to the state governments, government companies, corporations, and other parties directly indirectly related with the central government. Vote on account. The vote on account is a grant made in advance by the Parliament in respect of the estimated expenditure for a part of new financial year, pending the completion of procedure relating to the voting on the demand for grants and passing of the appropriation. Time. Parliament, unfortunately, has very limited time for scrutinize the expenditure demands of all the ministries. So once the prescribed period for the discussion on demands for grants is over, the Speaker of Lok Sabha puts all the outstanding demands for grants, whether discussed or not, to the vote of the House. This process is known as guillotine. The public account. Under the provision of Article 266(1) of the Indian Constitution, public account used in addition to all the fund flows where government is acting as a bank. Examples include provident funds and small savings. This money does not belong to the government, but it is to be returned to the depositor. The expenditure from this fund need to be approved by the Parliament. So here we have finished the topic. Now it's a part for summary. We have seen the dividend distribution tax, venture capital funds, securities transaction tax, capital gains tax, ad valorem. Then we have seen advance pricing agreement, fiscal consolidation, current account deficit, bear market, bull market. Then inflation risk, interest rate risk, direct indirect taxes, custom duties, and primary deficit. After this, we have gone through monetary policy, fiscal deficit, revenue deficit, and capital budget. Then vote on account, guillotine, and public account. So here we have finished the topic. It is requested to all of you, kindly revise all the facts and figures that we have discussed in this lecture and be ready for the next one. With this note, let's end this lecture and